You may have heard that Travis Kelce just won another Super Bowl, which is great for him and the Kansas City Chiefs. However, he's also up to something else that you may not be aware of. He's now becoming an investor in the wonderful world of Hollywood film production. That's right, he's investing money in a Hollywood film production that has other investors in it. And one of the things that Travis may be doing, I don't know his factual situation, but there is a specific Internal Revenue Code section that allows certain investments in film productions to generate a 4-to-1 write-off for every dollar invested. So for example, if you put $100,000 into a film that qualifies, the investor gets a $400,000 deduction right away in that year that the investment is made. If someone's at a maximum tax rate of 40%, or let's say California at 50%, that generates an immediate $160,000 tax deduction, which is a 60% return or more immediately. You're very hard pressed to find that kind of return with any other kind of investment that is really very low risk because it's statutorily in the Internal Revenue Code. So that might be one of Travis's motivations. The other thing that caught my eye is one of the investors is investing funds that he received from selling solar credits, energy credits, that he generated as part of the Inflation Reduction Act of 2023. Now, the way that works is there was a massive bill that passed last year, which you probably heard about, and it provides billions and billions of dollars of credits for solar and other alternative energy sources. Well, the investor in this project generates credits, but most of the people who generate the credits are losing money. They're not able to use credits to reduce their tax liability. So the government said, okay, we'll let you sell those credits so you can monetize them and keep investing in these energy sources that we want to promote. So when the sale of the credits occurs, the investor who's selling the credits, it doesn't have to recognize any taxable income, so it's tax-free to the seller. The buyer gets immediate credit against tax liability. And just for example, if someone's generated $1 million of credits and they sell those for $800,000, the buyer is going to get an immediate $1 million credit. So that means that they just made $200,000 on their $800,000 investment, which is 25%. And that's, again, an immediate return on investment. So these sorts of things are out there, like film and energy. And if your CPAs aren't bringing them to you and you got significant tax liabilities, you don't have to be an ultra net worth, ultra high income person like Travis Kelce to take advantage of these credits and some of these deductions. Many high earners can do it without being ultra wealthy. So if that's of interest to you, I invite you to click on the link below and set up a 30-minute call with me where we can talk more about your current tax position and figure out how to move forward and get significant tax planning savings for you and your family as you move through this current year.